If you are wondering what to expect from the housing market in the last quarter of 2020 and into 2021, today's video is for you. Hey everyone, it's Shelly from the Shelly Killinger Group at RE/MAX CSI. So today we're diving into a full-blown 5-alarm housing market update. We're going to tackle hopefully two things. We're going to dive into the August statistics. So all 30 days of August, what did we see in the southwest section of the Pittsburgh market? We're going to talk about active properties for sale, properties that actually closed and sold, days on market, how long it took for things to sell. We're going to dive into those statistics for the southwest section of the Pittsburgh market. That is task number one. Task number two is to go into a housing market recovery update. It's been a little while since we've actually talked about how is the housing market, nationally speaking, looking as we enter the last quarter of the year and as we enter 2021. We've got COVID still going on. We've got an election that's tumultuous coming up. How are the projections for the U.S. housing market looking? So we do have a little bit of information to pass along. Obviously, no one has a crystal ball at this point, and things are changing every day, but we will give you the information that we have on the national housing market and what we can expect in the coming months and into 2021. So that's item number two. So let's talk about task number one, which is the hyper-local southwest section of the Pittsburgh market update. So if we take a look at the number of active properties for sale at the end of August, we had 496 properties that were active for sale at the end of August. Now, if you watched last month's market update, you might be thinking, well, gosh, that's really good, because we had only 480 properties active for sale at the end of July in the southwest section of the Pittsburgh market. It is an improvement, and it is awesome. We will take any improvement we can get, because as you might recall, we have been in a very low inventory situation, which means there haven't been very many houses for buyers to choose from. So any increase is a welcome thing for buyers. But if we take a look a year ago, August of 2019, we actually had 697 properties that were active for sale at the end of August of 2019. So the inventory shortage does continue. We are at far lower inventory levels than we need to be in order to satisfy the high level of buyer demand that we have currently. So that storyline that we've been seeing over the past many months is continuing, that we don't really have enough inventory considering the level of buyer demand that we have. The next statistic that we look at is the number of sold properties. So we had 406 properties sell in the month of August, which, as you can see, we had 496 properties that were active. We have 406 properties that sold. The inventory is being gobbled up by that buyer demand because buyers are just out there. They're selling. The properties are changing hands. Buyer confidence in the market has not faltered one bit. So that is definitely a good thing. But we had 406 properties that were sold in the month of August. In the month of July, we did see 442 properties that sold. If we take a look at our average days on market, so days on market in the month of August were 39 days, which is very quick. It's only taking 39 days for a property to sell. In the month of July, we were looking at 43 days. So we're actually at a decreased number. So houses are even selling even faster, which again, not necessarily a surprise because we don't have very many houses to choose from. Houses tend to go faster. They don't stay on the market very long. And even the closings these days are not taking very long because buyers are wanting to write offers that are appealing to sellers. Sellers a lot of times need to move out quickly. So they're doing these quick closings, 30, 35-day closings, to be able to get sellers out the door and onto their next stop, as quickly as they possibly can. So really days on market is decreasing as well. So those are our hyper local numbers in terms of the southwest section of the Pittsburgh market. Now I want to dive into a little bit of housing market recovery. So it's been a little while since we've talked about this. We predicted even when COVID just started that the housing market would remain strong throughout this. We obviously would take a little bit of a hit when things were completely shut down. Everyone did, but we didn't anticipate any long-term repercussions. And really that sentiment has continued even through into the fall as we enter the fourth quarter. So I want to take a look at a couple things. A lot of people are talking about appreciation in home home prices. And there was some speculation that home values would actually go down as a result of the coronavirus. And we have actually not seen that to be the case. So I want you to take a look at this first slide. So this is projections on future home prices. Now this is an adjusted slide. They came out with some predictions. They have a lot of major players here: Fannie Mae, the National Association of Realtors, the Mortgage Bankers Association of America, Zillow. All of these major players had weighed in at the beginning of COVID saying, what do we anticipate that home values will appreciate over the next year given the pandemic and given the election? Now you can see that most of these major entities are predicting appreciation. There's only one that is predicting negative, an actual downturn or a decrease in values, home values. Most of these are predicting, on average 3%, 3.6%. We've even got Fannie Mae at 4.4%. They're predicting that home values over the next year are going to actually appreciate 4.4%. Now let me remind you, a normal year in Pittsburgh is a 3.6% appreciation, which is Zillow's prediction for the next year. So we have got some major entities predicting that we're actually going to have an above average year. Given the pandemic, given the tumultuous election, I think that is something to be incredibly positive about. They're anticipating a normal or above average year considering all of those factors. And yes, you've got some that are hovering around that 3% or 2.3% range. Given what we've been through, that is definitely not a bad thing. Everything still shows price appreciation, which is really good. I want to show you the next slide. This is where they originally forecasted our appreciation to be. So you can see the biggest changes happened between Fannie Mae, Zillow, and CoreLogic. CoreLogic was originally anticipating a 6.6% depreciation in home values, and you can see that they're very modest, but they're predicting a much better forecast at 0.6% appreciation. Zillow changed their prediction from negative 3% to 3.6%, and Fannie Mae was predicting a 0.4% appreciation. Now they're actually anticipating the greatest of all, the 4.4% appreciation over the next year. So you can see things are fluctuating. Obviously, at the beginning of the pandemic, we had no idea what was going to happen. We really hoped and predicted that things would be fine in terms of the real estate market, and a lot of these major players have had major adjustments to their forecast in terms of home values. So overall, guys, I feel strong in saying that we're going to have a pretty decent year in real estate, and even 2021 is looking really great in terms of home values. They're still expected to increase. A large reason why home values are still going up is because of the high level of buyer demand that is out there. Let's actually take a look at this next slide. This is all about home buyer traffic. So these are showings that have happened over houses, at homes, at active listings. So this quote says home buyer traffic jumped again in July, recording a 60.7% year-over-year increase in nationwide showing activity, according to the showing index from ShowingTime. 60.7%, guys. And if you look at the Northeast, where Pittsburgh is located, that's a 76.6% increase year over year in showing activity. That shows buyer demand. So we are at 76% higher number of showings now than we were a year ago. Buyer demand is out there, guys. Buyer demand is not going anywhere anytime soon. And that is what is the major factor in driving home prices up. So keep that in mind when we talk about home values, that the buyer demand is very strong right now, and we're anticipating it to maintain at that level of strength. So we anticipate that home values are going to continue to go up well into 2021. If we take a look at our final slide here, this is the opposite end of the coin. Although buyer demand is incredibly high, and you can see that this slide shows the Fannie Mae Home Purchase Sentiment Index. So this is where Fannie Mae interviews people about, how do you feel about buying a home? Do you feel it's a good time to buy? Do you feel it's a good time to sell? And they have it graphed out here. And we have got the light blue line are sellers. Now, obviously, once we hit February and March of 2020, their comfort level with selling dropped off the map. And they have not recovered. They have not recovered. And that is shown in the low inventory levels. We have a lot of sellers that are kind of sitting back right now, and they're unsure. there's a pandemic going on. They're not sure if they have anywhere to go because there's really not much on the market. There's a tumultuous presidential election coming up, so they're really not sure what's going to happen there. So they have not really recovered in terms of their confidence in, is this a good time to sell? Now, buyers, on the other hand, you can see, have more than recovered. They are feeling very confident it's a good time to buy. Interest rates are low. Why wouldn't they want to buy? There's really high demand. So buyers are feeling very confident. Sellers, on the other hand, are not. What I see on this slide is an opportunity. There are not very many houses on the market. Sellers are really feeling unsure, and part of it might be just because of health concerns, and they really don't feel like traipsing around looking at houses and having people in their house as they're showing it to sell it. A lot of it might be that as well. But if you are a seller and you've been on the fence, this slide shows that there is a massive opportunity for sellers. Sellers are feeling uncertain, but buyers are feeling incredibly confident that it's a good time to buy. That means that if you put your home on the market, likely it will go faster than you anticipate for perhaps more money than you anticipate. So there is definitely an opportunity there if you have had thoughts of selling. So overall, guys, I would say on a local level, we are looking very strong. We've got lots of buyers out there. There's a massive opportunity for buyers in interest rates right now. They're very low. In terms of sellers locally, there is also a massive opportunity because there aren't very many homes on the market, and homes that are actually listed are going for more than sellers ever thought that they could get, oftentimes in multiple offers. On a national level, really we're looking good as well. As we enter into the fourth quarter and as we enter into 2021, predictions are looking good for a great year of home value appreciation. Buyer demand is expected to hang around. Interest rates aren't predicted to go anywhere. So we're anticipating a really healthy end of the year in 2020 and an amazing year in 2021. Now, like I said before, obviously nobody has a crystal ball, but the predictions are really changing towards the positive, as you saw in a couple of those slides. So stay positive out there, guys. If you're thinking about jumping into the market, call us with any questions you have. Of course, we're more than happy to help. Thank you guys so much for watching. And by the way, if you have not yet subscribed to our channel, do so now. You don't want to miss out on any of our awesome videos we post every single Tuesday. Have a great day, guys. Talk to you soon.